Welcome to Tearsheet's Outlier Briefing. I'm editor Zach Miller. This subscriber-only event is exclusive for our Outlier members. We go deeper with subject matter experts to take actionable steps that can impact your business and practice. Today's expert is Ted Brown. He's co-founder and CEO of a company called Digital Onboarding. He's been in fintech for his entire career, and his first company, Andera, built the first way to open up a bank account online. Now, his firm Digital Onboarding makes sure those people who opened up accounts become engaged, profitable relationships. During this Outlier Briefing, we discuss why attrition rates of new customers are so stubbornly high in banking, what typical onboarding experiences are like at banks and credit unions, and why they fail, what top FIs are doing to improve onboarding rates, and how onboarding is evolving and the role of technology to create engaged clients. Digital Onboarding's Ted Brown is our expert on today's Outlier Briefing.
To hear the full audio and to access all of our exclusive member-only content, head on over to tearsheet.co/outlier.
Morning, Zach. I'm Ted Brown. I'm the co-founder and CEO of a company called Digital Onboarding. With large national brands, the ones you've all heard of, we know that if someone opens up a checking account in an area out of footprint, meaning called a state where they don't have any branches, the first year attrition rates on a checking account are north of 90%. But inertia is key. You can make the simplest account opening process in the world, which is a smart idea. Someday you'll be able to look at your phone, it'll face ID you, do the verification process, and your account will be opened. But it still takes time, effort, thought to follow up with things like direct deposits and all those other steps, downloading the app, giving it a shot. Inertia is the key one that you can solve for through simplifying the process and having a smart engagement follow-up to it. It's a packet of brochures and a prayer.
I love that. That's going to be the title of this episode, Packet of Brochures and a Prayer.
Yeah. About 45% of banks and credit unions have no structured follow-up process at all after a bank account is open. So I'm not exactly sure who popularized this, but this whole 2x2x2, have you heard of that?
No. Explain to us what that is.
There's this whole, someone had to have invented or popularized this, probably 30 years ago or a long time ago, where you send 2 letters, you call someone two days after 2 days, 2 weeks, 2 months to kind of check in, but it's all very manual. It's based off phone calls and print. And it's very popular in terms of tactics. But when you start digging into the numbers, it clearly doesn't work because the engagement's not there with the 2x2x2 methodology. But you make a very good point in terms of the relative advantage for community banks and credit unions. And it's their pre-existing relationships. And I point that out and I emphasize pre-existing relationships because their unfair advantage is not necessarily competing in the digital world. And I know that's somewhat controversial to say, but and everyone, of course, it's logical to want to build a digital bank or a digital brand and things like that. But the hard reality is that for the thousands of community banks and credit unions, they'll never compete with Chase, Bank of America, the large regionals, or the digital neobanks in terms of spend or reach digitally. So it's a very tempting thing to do, but that's not the unfair advantage for community banks.
To hear the full audio and to access all of our exclusive member-only content, head on over to tearsheet.co/outlier.